Well, good afternoon or whatever time of day that you're watching this. If it's live, it's Thursday, June 10th, 2021. I'm Mary Bartos, the Bartos Group of Premier Plus Realty. Our host and my co-host is Cheryl Stokes with New American Funding. And Cheryl, we're talking about what happened in May of 2021.
It's so hard to believe that it is June already.
It's hard to believe. Well, we'll get right to it and jump to the slides because I know you all want to hear what we have to say and get to the juice of it. So our housing update for June of 2020 is as such. Can you see it? Okay. And we got slides up there?
Yep.
Great. Well, do we have a problem, Cheryl? In housing?
We have a problem.
What was that? What was that show that they used to say? Kirk, we have a problem here, or Captain, we have a problem from Star Trek. We have a problem. We have a supply problem, an inventory problem of homes. We have huge, strong buyer demand, and really, quite honestly, we have this rise in bidding wars. That is a struggle because we do have a lot of good things that are going on in housing, right, Cheryl? The good thing is interest rates.
Right. Interest rates remain low. It's very affordable to purchase a home right now. Income has gone up and rates are still low. Hence, we have a strong demand for home buying.
Strong. So let's talk about this. Cheryl, this is a statistic nationwide, that the National Association of Realtors, Lawrence Yun, put out. For every listing, there are 5.1 offers, and half of the homes are being sold above list price. Can you even believe that?
No, but I can believe it because I'm seeing it every day.
Exactly. And that really, quite honestly, is the problem. There is not enough inventory. So it's this feeding frenzy. So if you're looking to sell, boy, this is the time to do it because there is this feeding frenzy of buyers. But let's talk about that a little bit more. Nationwide, and I'm going to have to get my glasses on, Cheryl, March of 2021, year over year house appreciation, according to the Federal Housing Finance Agency, price index is 13.9%.
That's an amazing increase in 1 year.
Yep. CoreLogic Home Price Insights report was 11.3.
Right. So whether it's 11 or 13, those are amazing numbers.
Amazing numbers. And that's year over year, right? So, okay, that makes a lot of sense because March, we had the down. But in our area, it's even stronger, and we'll talk about that in a minute. Go ahead, Cheryl, and read this one, that Bill McBride. What is it he's saying?
Sure. He says, if inventory increases slowly, house prices will continue to rise rapidly. And if inventory increases sharply, house price growth will slow.
Well, and Cheryl, that's interesting because we have buyers every day that are saying, well, I'll just wait till it falls off. I'll just wait till we see it reset. I'll just wait. Well, the whole gist here is we don't have enough inventory. And even when we get more inventory, it's just not going to go up at an astronomical pace. They're not looking in the rearview mirror going, hey, you bought too high and it's going to be really low, correct?
Right. And the thought that inventory is going to increase sharply in the next rest of the year, it's not going to happen. It won't.
Especially in our market.
Correct.
It is really difficult in Southwest Florida to get inventory right now. We thought it would release when we got through the pandemic, but it really did not. And we'll talk about that in a minute. So Cheryl, this is crazy, right? Home price forecasts. Remember way back when they said it was going to go up maybe an average of 5%. Now that average of all forecasts is 7.1%. Crazy.
It is crazy. And all the projections I'm seeing is it's going to remain that way next year as well.
Yep, absolutely. Absolutely. So, Cheryl, you know best about affordability, right? We've got interest rates, we have price of the home, and we have income, measure affordability. So talk about this next, well, let's see what NAR says for housing affordability. Go ahead and read that.
Well, they're saying affordability is increasing in March as incomes surge. So what we're seeing is that incomes, even though we're coming out of the pandemic, incomes are increasing.
Yeah.
The people are going back to work, and the people who have been working all along, incomes are continuing to rise.
Absolutely. So that's awesome. This chart just shocks me, right, Cheryl, because affordability index is like from the 90s to today. Looking at that in this area over here, that in the distressed foreclosure years, in the orange,
right,
higher number, more affordability. Look at that where we are today in the blue. We are in those same years when we were in the bottom pits of the foreclosure.
Correct, because if you think at that point in time, what were the interest rates? So the prices were low, but the economy was different at that point in time. The interest rates were different. Now what we have is increased income, low interest rates, and high demand.
Yeah, that affordability is amazing across the country. And we're seeing this not just in our area, Cheryl. They're seeing it. Your peers, everywhere. I'm sure, are talking about what's happening everywhere, right?
Yeah, it's all across the country for sure.
And then, from a percent of the median income needed to purchase the median priced home. Cheryl, you've been in the business a long time. Talk about this as it relates to what you're seeing in our area.
Well, this again is really all about interest rates, because the affordability happens on what are you paying to purchase this home. And if your income has gone up, even if home prices are going up, the low interest rates are keeping that higher priced home affordable, and they're more affordable than they've been in years because of those interest rates. You have income and rates that are pushing the ability for you to finance higher.
Without a doubt. And you look at that, even in the height of 2006, which was right when the market crashed, so to speak, the ability for medium priced home to purchase, they needed 25% at that point. Of course, we all know that there was problems, right, Cheryl, with giving loans of things that people really couldn't afford. Look at today. It's only
14%, right? And what this means is it only takes 14% of your income to be in that medium price range, not 25%.
Right. And, as we went through this last 5 months, over 50% of our home buyers were buying through cash. And that's a lot. Now, the Bartos Group helped so far this year, 320 some odd families, pending and closed. And of that, 70% have been buyers. We've been doing really well winning, Cheryl, in these multiple bid situations because there is no inventory. And think about 50% of that number. We're not talking about one or two. We're looking at a large number to come up with those percentage that we're seeing in our own group.
Absolutely. And I think the scenario for both the cash buyers and the finance buyers is more and more people understand, based on what we've come through in the last year, that there is value in investing in your home and in property.
Absolutely. Absolutely. So as we move on, Mike Lofton, go ahead and this kind of leads in to what you're saying, Cheryl. Go ahead and read that quote.
Contrary to popular belief, owning one's own home is frequently more affordable than renting. It is cheaper to buy a home than it is to rent in 2/3 of American counties.
That's crazy, right?
It is crazy, but that goes to that whole, what percentage of your income are you spending on rent when you could be spending that same percentage or less, based on the slide we just saw, on ownership and building equity.
And, Cheryl, one of the things that comes up in the working class, which I consider myself, right, working class, is maybe they don't have enough down payment for the home that they want versus renting, right? But that's where you come in. You come in to give options to say, hey, there's 5 ways we can do this. Which one's best for you?
Absolutely. And a lot of people have a misconception of how much down payment they need. There are a variety of options and a variety of loan programs that can help a first-time home buyer or a second home buyer. There are many things that we can look at to see, one, can they qualify? Two, do they have the cash available to get in? And how are we going to get that accomplished for them?
I just was talking with one of the agents on our team today and said just that, make sure you call Cheryl from that very point. Now, we just talked about rent. Look at these rents that have gone up, Cheryl, since 1990. Same slide, affordability up and down since 1990. They have skyrocketed in the last, 3 to 5 years?
Absolutely. And then you go back to that other slide where the percentage of your income that it takes to own has gone down since 2006. The percentage of your income to pay rent has done nothing but gone up. And if you look at it, one way is you're paying someone else's mortgage when you're paying rent.
Without a doubt. And that's an interesting thought, right? From that perspective, I have a client that wants to sell their place. I've actually 3 clients right now that are selling their places that have renters in them, and the renters weren't ready to move out.
Right.
And they're like, wait a minute. 2 of them had contracts that allowed for the homeowner to, move them on to the next place. One of them didn't. And we're struggling to find a new place to rent for that client.
That is affordable.
Yeah, that's affordable. Yeah. And, because what they're getting was a really good deal. They did it 2 years ago. And now what's happening? Now They can't find what they want at the price they need it at. And they've got her over a barrel because she can't sell until they move on. They agree to move on because of the way she wrote the contract. So rent, my friends, is, I've seen people kicked out because the owner wants to sell. And who wouldn't want to sell right now? Let's face it, Cheryl, if you're done with, having renters in your place, boy, what a time to sell with these great values that we have right now, Well, let's talk about something else, because buyers have been talking a little bit about forbearance, right? Well, I'm just going to wait till the market shifts and all these foreclosures are going to flood the market.
Right.
So
that's what they think.
Talk a little bit about this, if you will.
Sure. So when all of this began a little over a year ago, there was a projection that there could possibly be 30% of existing homeowners who would go into forbearance. In actuality, the top was 8.47%. And today we're all the way back down to 4.19%. And what does that tell us? So forbearance occurs all the time. And we're in that, 2.75% to 3.5% range, depending on the year over year. There's always some going on. So we're almost back down to the normal occurrence of forbearance that we were before COVID even happened. The housing market has recovered from the whole process.
Absolutely. The 2 slides, slide after this one really hits it home. But this is just, Cheryl, what you were talking about, going from 8.4% and how each month that has come down.
Correct.
It's just every month. And then what I love about this particular slide is, 46.5 of the forbearances were paid in full. So,
correct.
Like you weren't sure, you're self-employed, you didn't know what was going to happen, right? And you just pushed your mortgage payment out a couple, 3 months.
Right.
And then all worked out, right?
Lots of people did that. They used it as a fail-safe. Everyone was, there was a fear factor going on. They entered into it, realized they were going to be just fine, and they paid it off. And Absolutely. Then there's another percentage, a little over 35%, who, they were slightly affected. They worked out a payment plan to send it back. And then there were 16% who were still in trouble. But as you see from the last slide, even those are continuing to find ways to get out of the situation.
Well, Cheryl, and I want to talk about something here on this slide because it's so real. We had a client that, last year was going into a short sale, those early on forbearance, right? And of course, we couldn't get the bank to respond because, of course, the bank is going into forbearance. Let's push it out, push it out. We're not gonna hold this against you during this time where you're not paying, right?
Right.
And we kept at that, and then the market shifted. We were able, Cheryl, to get this couple out of coming to the table with tons of money that they didn't have. They about broke even. The new people got a great value on the unit that they bought. And more importantly, these folks didn't have to come to the table with money.
Or go into a short sale situation.
Or go and hurt their credit.
Right.
And God forbid, you're listening to this today and you go, hey, that's me. I'm there. We're here to help you. If we can help and get you out of that situation, because the market has shifted so drastically, we are going to tell you straight up that we can. And if not, if you're so underwater with this house, then we're going to help you through that. But don't feel like you're doing it alone. I try to tell this to people. Make sure, phone a friend, bring in your trusted advisor. If Cheryl and I can be your trusted advisors, we will. She has ways to restructure a mortgage. I have ways to get you out from underneath that if you choose to sell. We're here to help you. So again, there's that 16% or so that are still in trouble, that we're here.
Absolutely. And it's a unique situation because since it is such a hot market, since there is a shortage, in other times, those people would not be able to save themselves in this situation. And now maybe they can. And it's a win-win for everybody.
It is a win-win. You don't get your credit ticked and you can go on and go about what you want.
Right.
We're here to help. And again, our contact information is always at the back of this or at the bottom of this, whatever you're looking at. Please feel free to reach out to either one of us. And by the way, if you have questions, remember, this is live, so you can come on and ask questions at any point. So, okay, Cheryl, we're to that point where what's really happening in our area, right? Well, one of the things that I like to show, and I'm going to have to put these glasses back on again because it's a little bitty print, is look, the blue line itself is what happened in 2020. So the dark blue line, if you can see the colors. The grayish blue line is what happened in 19, and the orange line is where we are today in 2021. So we clearly don't have all data for all months in 2021 because we're sitting here at June 10th, and I pulled this report yesterday. My point on this is rather interesting. We, in 2021, although we're doing almost double-ish what we did in 2020, the showings are about the same as what they did in 2020.
Right. And what I think is interesting, we're about the same all 3 years. We're almost in the same spot.
Yeah. So that tells me that we're showing maybe less or the same, but people are buying. They're moving quickly, right?
Absolutely.
The other thing that I found interesting is we usually dip in this area around the end of May because Memorial Day, kids get out of school, etc.
Mm-hmm.
That dip is still pretty sharp here. It is going back up. But for my folks that are listing that are in a primary market for their homes, we saw this in showings for their homes. It just got quiet in the month of May and it kind of came down and they're like, oh my gosh, is it going away? No, we don't think that, but people are looking at less and they're quickly buying.
Correct. They don't have the opportunity to spend a lot of time, and they understand that. They need to look at 5 instead of 15 and make a choice.
Absolutely. If we're going to make a choice. Now, the next one drives us home because, Cheryl, this is crazy. When I look at this slide, and I will tell you, when I pulled it together, I was blown away. So the dark blue line is Naples. Orange line, kind of lighter oranges, is Fort Myers. The line towards the bottom that's blue is Bonita. These are all areas in our market. The dark orange is Marco, and the gray is Estero, okay?
Mm-hmm.
Look at the trend on every single one of these is unbelievable. Naples usually carries in high season 7,000 to 8,000 properties, Cheryl. We are at 1,100 for sale properties. 1,100.
Crazy.
Marco
Crazy
Island. Yeah. And I'm just going to use a couple of these. Marco Island on here is like at 180. And in, there's 20,000 doors or available doors and land on the island. We typically carry anywhere from 1,500 on a glutton time, 2,000. We're at 180. Single family homes and condos were probably about 220, 240 with everything. Unbelievable.
It is unbelievable. And that tells you why the values are going up at this point in time.
And, if I think through that, Cheryl, our increases in the last year have gone anywhere from around 14% for Fort Myers and Estero, in the 36 to 38 range for Marco Island and Naples in a year. I have two homes that are active on the market right now under $800,000 on Marco Island. So single family homes under $800,000 on Marco Island. And here in June 10th, do you know how many total there are that is their competitors?
None would be my guess.
Good guess, but it's a little higher than none, but I like your guess. See, I never coach her on these things. 10 on the whole entire island under 800,000. Do you know what under 800,000 buys you? Not a lot.
Right.
You're not getting on the water. I think there's one on the water for under 800, and the rest are inland. And there's not, you don't get a lot for your money. So the alternatives for these folks that really want to live on the island and be on the island, to get a price that, I don't know, in my world, I think $700,000 to $800,000 is a lot of money, right? So having said that, Cheryl, this is where we are. We've put this a bunch of different ways. Historic sellers market, home buyers heading to Florida, low interest rates, low inventory. Really, all we need is you, my friends, because at the end of the day, we've got a buyer for your house.
Absolutely.
And probably 5 or 10.
At least 5.1.
5.1, Cheryl, you're spot on. 5.1 buyers for your home. Cheryl, what closing thoughts do you have?
My closing thoughts are the market. I don't foresee this changing anytime soon. So if you are interested in buying or interested in selling, you need to go ahead and contact your trusted advisor. If it's us, that's terrific. We're happy to help. But it is time to really consider it, really check out your options, and either sell and recoup that increased price, or buy while it is still affordable, because even though prices are rising, rates are low and nothing is in stone. So take advantage of the opportunity now.
I love that you said that, because we didn't put this slide in there, but we've had this slide in the past. Well, where will I go? Right? What will I do? One option is to breathe, put it into a FDIC backed, instrument where you can just let it have a minute to do something, especially if you're at a certain age, right? As we all age, these decisions are different than when we're young. When we're young and that's all growing. Now we're building. If we haven't built the net worth already, we're, looking at those options. Cheryl, today I just did an interview for, and I'll put a, plug in for the Really Merry show that we do every week with Discovery Village at Naples, which is the Discovery Senior Living, which is amazing. And it's an option. They have independent living, which is awesome. They have, that continuing care that in case you need to do something different, that you never have to move again. And it pulls in that you're not putting exorbitant amounts down to go there, right? I have a lot of folks say, where will I go? Right. Well, maybe we take the money out of one market and put it into a newer home in a different market, whether it's in Southwest Florida or somebody else. The point is if you've thought about moving, it is a great time to get the most out of that property.
Absolutely. Absolutely. And if you're thinking about buying, it is a great time while it's still affordable and incomes are rising to get yourself in the door and weather out the economies of the future, but start building your own familial wealth through equity.
I couldn't have said that better. And with that, Cheryl, my friend, this is a wrap for June, and we will be back together in July.
Sounds great.
Ciao.
Ciao.